Good afternoon. Welcome to our weekly livestock market update. I'm Brownfield anchor reporter Megan Grebner. With us is University of Missouri, Scott Brown. Good afternoon, Scott.
Good afternoon, Megan.
And we're going to talk all things markets today. And the last couple of weeks, the last few weeks, it's definitely been more of a negative tone. But this week, we get to talk a little positives when it comes to the markets.
It's nice to have a week where we can talk about a lot more positives to these cattle and hog markets than we've had for a while. If we look at cash fed cattle prices, they were up about 75 cents this week, while feeder cattle were steady to 4 higher. And again, we were on a shortened week here as most everything was shut down on Monday. Growth on the futures side as well. When you look at the October live cattle futures contract, up about $1.25 this week, while the October feeder cattle futures closed up nearly $4 higher this week. Choice box beef price was down $2.75 this week, really on weakness that we saw in chucks and loins, leading the way there for lower choice box beef prices. On the hog side of the equation, Barrow and gilt prices were nearly $1 higher this week, while that October lean hog futures contract was up strong, up more than $4.50 this week. The pork cutout value was also up this week, $2.66. And thanks to what was strength across the board, but really led by higher belly prices this week that helped that pork cutout value go higher.
Scott, I think we have to talk a little bit specifically on the lean hog futures side of things. More cases of African swine fever have been reported. We saw a sharp jump in the nearby contract on Thursday afternoon. How closely related are those, especially as they've come out to say that they're not sure that they can control the spread of the African swine fever in China?
Yeah, so I think since we've been talking about this for the last few weeks, the thing that continues to unfold is that there's probably more uncertainty in terms of whether it can get under control. We get different counts in terms of the number of cases, but for sure, we're in that double-digit level of cases at this point. And many might suggest, well, okay, can the Chinese actually hold the kind of tariffs that they have today? Are they going to need product coming from places like the United States? So I think a lot of the strength that we've seen in futures markets are certainly some who are expecting that African swine fever in China could be a real positive for U.S. pork markets.
Scott, as we talk about the Chinese and the control aspect of it, there's also been some talk or some speculation coming from other countries that maybe they're underreporting. Is that also a concern? Does that lead into some uncertainty and volatility in prices?
Yeah, absolutely. I think you make a good point here, and I will remind folks that this might be a risk management opportunity as well. We've seen a lot of some strength in markets of late as people are anticipating what's a more positive situation as a result of this. So if folks are underreporting, which may be the case, it's really hard to get a good count on where we sit. But the idea we could get some price strength, I would remind us that we're still going to produce a lot of pork in this country in 2018, and being able to find a point in time where you might be willing to lock in some prices. This might be one of those opportunities to take advantage of that volatility on the upside that might be happening over the next few weeks if this continues to unfold with more and more cases.
You bring up having a lot of supply. We keep talking about two aspects of the demand side of it, domestic and international, global demand. We'll talk about both of those today. Let's start first with domestic demand. And as we take a look at last week's restaurant performance index and this week's jobs report.
Yeah, if we look at the restaurant performance index that we got last week, so July came in overall index at 101.1. So still growth, a little bit slower than what we saw back in June, but strength nonetheless. If we dig a little deeper into that report, consumer traffic was actually down a point relative to where we were a month ago. And I think that had a little bit to do with dragging down at least the growth in the overall current situation index. For me, the good news is when you look at the expectations portion of that index, still strong, coming in at 101.4. A lot of folks still anticipate as we look ahead restaurant volume and restaurant traffic will continue to be good. So good news out of that, and that domestic demand's really been important for us. You couple that with what we got out of today's jobs report. So 201,000 jobs added in August. We exceeded pre-report estimates in terms of job growth numbers. The unemployment rate did stay at 3.9%. Some thought that would actually tick down to 3.8, did not out of the report. But perhaps the most surprising thing that we got out of today's jobs report was some real growth in wages. Average hourly earnings up to 0.9% year over year. That kind of additional money in the pocket for a lot of consumers, I think, is helpful in terms of what we might say in terms of consumption of meat products.
Good news on that side of those side of things, especially as we know, and we want to see continued growth in demand here in the U.S. We also, though, need to see continued growth and at least maintaining levels for demand for U.S. products in the global market. Let's talk a little bit about this week's export report.
Yeah, so we got monthly trade data out that gave us July numbers this week, and I will say a little bit of tale of two different meats, if you will. And we'll start on the beef side and be positive. Beef exports, both in terms of volume and value, have been quite strong, up 10 and 20% respectively. So we're moving more product and we're moving it at higher prices. That combination is what you want to see in the industry. The graph, when you look at value of beef exports as we move through 2018, is quite phenomenal. You can look at places like Japan, where I think we've had the highest level of exports post BSE ever. You can talk about South Korea, that's up more than 50% month over month in terms of that volume of exports. And there's just a lot of good news on the beef side. And I will say, I think when you look at beef, that's why we're getting prices that have stayed a lot stronger on the beef side relative to a year ago, whereas on the hog side. All right, so we do talk about these tariffs starting to make some difference. We are up 2% in terms of overall volume of pork leaving the U.S. through July of this year. Even in value terms, we're up slightly, but much less than we saw on the beef side. I think you can look at China in particular, where we talk about them being down 31% relative to a year ago in terms of July exports. And then on the pork variety side, down 49% relative to July of a year ago. Those things certainly have hurt on the pork side, even in Mexico. So we're talking about quantity being down 4% relative to a year ago. But this value side really hurts when you see that Mexico value down 25% relative to a year ago. So tariffs really starting to take a bite out of that Mexico side in particular.
We talk about opportunity for producers when we look at the whole African swine fever side of things, but there's also concern with downside risk as we continue and this trade and tariff game continues.
Yeah, let's hope we perhaps get something with Mexico down to the finish line here, because I think that could actually help pork as we get here in the latter part of 2018. And getting a higher price for that export quantity certainly could be important. And I'd be remiss again not to remind us that, we talked a lot about how tariffs hurt the pork industry in particular. But when you look at the quantity, it hasn't been hurt nearly as hard as what the value has been. So we've been able to trade product, but at a lot lower prices than we'd really like to. And that's really the effects of tariffs taking a bite out of that price side, if you will.
That's really all for us this week, Scott. As we look ahead to next week, what reports are we watching and what are we keeping an eye out for?
Well, we will get USDA to release their monthly WASDE report next Wednesday. I'll be curious to see what we get in terms of corn and soybean crops in the bins, as well as anything else on the livestock side as we start to think about the end of 2018. We'll also get a retail price report out on Thursday and in next week with consumer confidence.
Plenty for us to talk about again next week. Scott, good to see you. We will see you next Friday.
Great to see you as well, Megan.
To have our weekly livestock market update delivered to your email box every Saturday morning, visit our website, brownfieldagnews.com. You can subscribe there, but you can also submit questions and comments as well. And for market updates twice daily, make sure to check out John Perkins' Market Minute. Have a great weekend. I'm Megan Grebner for Brownfield.